What's going on, everybody? My name is Hunter, and in this video we're going to be talking about a monthly paying dividend stock that I believe has some very solid potential. We'll look into everything about this company, what they do, why I think there's potential within this stock. Now, a little disclaimer is that I am not invested in this dividend paying stock at the current moment. We'll talk about why I'm not invested in it later within the video. But before I go any further, if you enjoy dividend investing and dividend stocks and passive income, make sure you subscribe to the channel and you turn on post notifications for videos coming out Monday, Wednesday, and Friday. I'm trying to provide as much value as I possibly can. Let's get into this video. So what we're looking at right now is my portfolio. It's currently sitting at $10,172, and over the past day, we're up $60, which is a little bit ironic as I made a $60 buy today. I was $60, but 60 cents got excluded because the Apple stock was supposed to be a 60-cent purchase, but on M1 Finance, which is the fund, which is the platform that I use for investing in my dividend portfolio. If you want to use that, use the link in the description below. You get a free $50 if you deposit $100. It's free money that they're handing out. But if you do and you put money into your whole fund, what will happen is if it's any buy that's less than $1, they just won't do it. They just won't go through with it. We can see I bought JP Morgan, TD Bank. We won't even go into this. Let's talk about the monthly dividend stock that you guys came here to watch and see. And that is EPR Properties, ticker EPR. It is up 46.85% over the past year, and this is a REIT, a real estate investment trust. They pay these dividends on a monthly basis, and they have a nice dividend yield. We'll look more into it in a little bit, but this REIT is down 7.74% over the past 3 months, and that is mainly because of the whole Omicron variant and different things that are happening within this REIT. And it's mainly because this isn't an entertainment and experiential REIT. And so they don't necessarily buy Walmarts, or they don't own real estate like that. They don't own real estate that people go to no matter the climate, no matter the environment that's happening around them. They invest. You can look at their portfolio real quick. They have theaters, things like Topgolf and Big Shots, ski resorts, gaming, casinos, hotels, different things like that, fitness and wellness, gyms. So things that Omicron variant is not going to be helpful towards this. And it also, with this being down 3% over the past, 7% over the past 3 months, pretty much 8%, this does give you the opportunity to so-called buy the dip. We can see they went all the way up to $53.85 per share. That was November 5th. It's now December 22nd, and they're trading at $45.89. This stock right now has a dividend yield of 6.52%. That's a forward dividend yield. They have a market cap of $3.3 billion, which is very, very solid. Seeking Alpha gives them some bullish and neutral ratings, but the Seeking Alpha authors are very, very bullish on this company. Everything is pretty solid. Especially whenever you're coming to invest in a real estate investment trust, a REIT, you're not going to find the best growth rates. If you want to go invest in growth stocks, that's where you find the best growth rates. But pretty good valuation revisions and profitability within this dividend stock. But momentum and growth aren't necessarily the best, but that's not the biggest concern, as this is a slower growing company because it's a REIT. Now, the dividend grades: dividend safety a B-, a dividend yield of an A, and a dividend growth of a D-. And that is because as COVID happened, they had to actually cut their dividend. They were a consistent dividend payer and raiser pre-pandemic, but with its tenants facing an existential crisis, the REIT eliminated their dividend in 2020. However, back in July of 2021, they brought their monthly dividend back, and now it has a nice dividend yield of 6.52%. If you believe in life after COVID, EPR is one of the best monthly dividend stocks to play it. So that is some pretty powerful words. We can see right here, it says that there's a payout ratio of 101%, but I did some digging. We'll look into the financials and see what the real payout ratio is. Now, the dividend history, you can check it out for yourself. We can see right here, it was doing pretty solid, going all the way up, paying up to 38 cents per share. And then they went down to 29, and then they just completely cut the dividend for about a year. And they brought it back, and now they're paying consistent 25 cents on a monthly basis. Now, this stock over the past 5 years is down 34%. They were doing pretty bad downtrending, then they were doing pretty good. And then COVID hit, and they went from 72 per share all the way down to 18 per share. But they're making a comeback. They're uptrending, and this is kind of buying on that discount, looking on some more things like that. Now, about this company, they are the leading diversified experiential real estate investment trust specializing in select enduring experiential properties in the real estate industry. They look to create value by facilitating out-of-home leisure and recreation experiences where consumers choose to spend their discretionary time and money. So they're trying to give people good experiences and have people just enjoy their lifestyle in the best that they can. Now, looking towards their dividends and their payout ratio. They are paying pretty much 75 cents per share every single quarter. Now, we'll see here is their net income on a 2021 guidance is only supposed to be 76 cents, but they guided it up to 84 cents. Their flow from operations per diluted common share is $3. So that's $3.01, and they're paying out $3 roughly per share. So their payout ratio is pretty high, and that is a kind of a red flag, in my opinion, for a dividend stock, which is kind of, I would say, the main thesis holding me back from investing into this dividend stock. But with COVID and the uptrending, because I'm not just going to make a video about a stock that I think is completely worthless. Like, I believe there is value in the stock, but it's just not something that I think I should be putting in my portfolio at the current moment. If COVID and the Omicron variant can kind of slide past and things will start to be looking very solid in the future, I believe that this stock has massive potential and can definitely go from 45 per share, 46 per share, back up to its pre-COVID levels at $70 a share. And there's massive potential for that. And also to get that dividend income while you're experiencing that growth is just icing on the cake. And that's incredible stuff that you can get within this stock. Now, looking on some more stuff, I know this is 2019 Q2 investor presentation, but it's actually Q3 of 2021. What we'll see, same stuff, just better visual. Adjusted flow from share for common is 92 cents per share. You're paying out roughly 75 per share. This is 86 cents for flow from operation adjusted common. So we're looking at that. Pretty solid stuff that we're seeing. I really like to see all these different things for the stock. Flow from operations of share is very important when it comes to your REITs. Your net income per share for the quarter was 35 cents. So the payout ratio for net income is a little bit not that good, but the flow from operations is what I really look at and what I kind of stress on towards when it comes to real estate investment trust investing. Now let's look at this company's total financials over the past few years, going from 575 million to 700 million and then kind of dropping 2019. 2020 took a big hit, but the trailing 12 months, we're starting to see that rebound coming in right now. The net income is back up to $34 million, which we really, really like to see. Looking towards this company's balance sheet, 6.7 billion in assets compared to 4 billion in liabilities. And cash flow, just to give it a quick little look, free cash flow sitting very solid at 242 million, making a big uptrend from 2020 levels. So we really, really do like to see these numbers. Statistics, we've got a profit margin of 7.33% and an operating margin over the trailing 12 months of 40.79%, which is pretty solid stuff. I really like to see these good margins. Now, earnings estimate, analysts are expecting some good stuff for this dividend stock, this REIT, over the next few years. From 2021 of adjusted 81 cents per share earnings, it's expected to make $1.69 earnings. That's a huge return, okay? So we're seeing big expectations for this company and big rebounds could bring us back to pre-COVID levels, which we really love to see on this dividend stock. Now, price targets for analysts, the median is $55, which gives the stock a 19.59% increase. These are 1 year, 12-month price targets. We can see a high of $62 and a low of $51, which is still the low price target gives it a 10.9% return, which outpaces your average S&P 500 market. So we really do like to see that. Institutional activity, just to give you guys that sentiment, there has been more selling pressure actually over the past few months and ever since kind of 2020, but that does not necessarily mean it's the end of this world because a lot of institutions and big names are still buying. You know, the market is literally buyer, seller, all that different types of things. But what we're seeing right now is UBS Management, Bank of New York Mellon Corp is buying, Millennium Management upping their position, their $34.25 million position by 260%, which is huge. Morgan Stanley upping their position by 115%, Invesco upping their $327 million position by 2.7% just in the past quarter. Goldman Sachs upping theirs by 9.6%. But we can look on some more stuff. You got big companies like BlackRock, you know, they're they're trimming their position. So keep that in the back of your mind. All these institutions are going to be going different ways, but it kind of gives us a sentiment on where people see the stock going. Some are bullish, some are bearish. It's how the markets goes. But everybody, that's what I have for you in this video. So if you did enjoy it, make sure you give the video a thumbs up and you subscribe. You turn on post notifications for videos coming out Monday, Wednesday, Friday. Thank you for making it to the end of this video. Leave a comment below what you think about this stock. I would like to see your guys' input, your guys' opinions. Thank you again. Check out M1 Finance. Use my link if you want to. Once you use that link and sign up for an account, if you deposit $100, you and me both get $50 free. You can check out my dividend stock portfolio using that link down below. Check it out for yourself. I would like to see what you guys think. Thank you again, and I will see you at the next video.